Hey everyone, in this video I've got one growth stock that's down 44% off the high that I think makes an excellent investment right now and for the rest of 2024. So in this video, I'll share with you what the growth stock is and why I like it so much. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the growth stock that I'm talking about here is Nike. Nike is down 44% off its high, and I think it makes an excellent investment at these current valuations. So let's take a look at why I'm liking Nike stock right now. So for the latest quarter, Nike's results were not great, and that's partly the reason why the stock price is down. Second quarter revenue of $13.4 billion was up just 1% from the same quarter last year. But Nike direct revenues were up by 6% year over year. Now, I'll talk a little bit more about this strategy, longer term strategy Nike is undergoing right now. So previously, Nike relied significantly on wholesale partners, companies like Foot Locker and Macy's, where Nike sold wholesale to them, and then Macy's and Foot Locker would then sell to customers. As you can imagine, Nike sells to wholesalers at lower prices because they need to generate profits as well. But when Nike sells directly to consumers from its own website or its own app or its own stores, those sales come at higher profit margins because they're cutting out the middleman. That's where Nike has focused in recent years. They're trying to cut out or reduce the influence of those wholesalers and go more direct to consumer. And that's where the strategy could yield better profit margins. And as you can see, wholesale revenues were down 2% year over year as part of that strategy. But also you could see the strategy working as gross profit margin increased by 170 basis points to 44.6%. Longer term, I suspect this will continue pushing its gross profit margin higher as Nike focuses more and more direct to consumer. Still, Nike announced an enterprise initiative to accelerate future growth while building a faster, more efficient Nike. This is, other words, a cost-cutting campaign, a job-cutting campaign to right-size the business, to allocate more towards its direct-to-consumer strategy and less for the wholesaler strategy. So a restructuring of the business that's expected to be completed in the first quarter or first half of calendar year 2024 for Nike, and that could also boost profitability going forward. Now, Nike also was caught off guard following the pandemic because it had too much inventory coming out of the pandemic as consumer behavior shifted rapidly from buying things to buying services, spending money away from home instead of spending money while at home. And that hurt Nike. And it had too much inventory when consumer behavior shifted. So you can see in the latest quarter, it adjusted well. Inventory was down significantly year over year as Nike manufactured less inventory and it wanted to bring down its inventory level. It mostly completed that inventory rebalance in its latest quarter. So the last few months to the last year have not been great for Nike, but I think that's opened up an opportunity. If you look at Nike longer term, revenue growth has been excellent, 51.5 billion in revenue in the most recent trailing 12-month period. That's up from a little more than 26 billion in 2015. It's almost doubled its revenue in the last decade. That's excellent, especially considering that it's mostly an apparel retailer, right? Shoes and clothing. To double your sales in a decade as an apparel business, that's relatively impressive because that's not a very fast growing industry. But Nike has grown within the industry, signaling it's taking market share. More consumers are preferring to spend on Nike than other goods. Additionally, Nike's operating profit margin has been solid. It's fluctuated of late because of the unprecedented circumstances of the pandemic, crashing, rebounding. It's been volatile to be sure, but it's going back up 11.76% in the most recent trailing 12-month period. And then that's longer term strategy that I talked about earlier in the video, where Nike's going direct to consumer. That should lift its operating profitability, I suspect, closer to 15% over the next 5 years. Now, the next year might be challenging as Nike rebalances and recovers from the circumstances of the pandemic. Longer term, I suspect Nike will reach or approach 15% operating profitability as this strategy works itself through its system and it relies less and less on wholesalers and more so direct to consumer. Now, it's not to say that it's not going to sell anything through wholesalers. It's still got wholesale partners. But what this strategy will do is rely less on wholesalers. So rather than relying on, 40% of its sales for wholesalers, it'll drop that down to 35, 30%, 36%. We don't know where it'll settle out to, but Nike will find its right size of that restructuring. And it'll also give Nike more negotiating power with these wholesalers. I don't know if you noticed, but when Foot Locker reported results in its most recent quarter, it struggled significantly as the lack of Nike inventory for Foot Locker is really hurting its business. People went to Foot Locker looking for Nike products, and if you're not going to have Nike products, people are not going to Foot Locker. So now Nike could go back to Foot Locker and say, look, you see how much you're struggling with less of our inventory. We'll give you more inventory, but you got to pay higher prices. We can't give you those discount prices anymore. And so this strategy will not only lift Nike in its direct-to-consumer business, but when it does decide, or if it decides to bring back these wholesalers, it'll have stronger negotiating power because it'll demonstrate how effective Nike is at bringing customers to their business, as evidenced by Foot Locker's lack of success in the last 12 months. Now, one metric I don't talk about too often on my channel is return on invested capital. It's an important metric that measures how good a company is at using capital to generate profits. How good are you at running your business, using money to create products and services to sell to customers? How good are you at that, right? How much return are you generating from that capital that investors have given you? And Nike has done a really good job in this metric. In the most recent update, 22.53% in the recent trailing 12-month period. But if you go back for the last decade, it's been consistently above 10%, above it hit above 32% during brief moments before the outbreak, before coming back down, and now it's rebounding nicely. The general rule of thumb is you want to have a return on invested capital that's higher than your weighted average cost of capital. And for Nike, this is by a wide margin. It's generating return on invested capital far above its weighted average cost of capital. That's as far as I'll get into. These are pretty advanced finance concepts, but I just wanted to demonstrate that Nike is earning a solid return on invested capital, and it's done so for decades. So it's proven that it is a good investment for capital. And finally, the valuation is arguably cheaper than it's ever been. Nike's trading at a forward price to earnings of 23.45. Investors have only once had an opportunity to buy Nike stock at a lower valuation than this, going back all the way to 2021. So in the last 3.5 years, you haven't had an opportunity to buy Nike at a lower price than this. So for all these reasons, I think Nike is one growth stock that investors can buy hand over fist right now and for the rest of 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.